Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of what companies are really up to. And let me tell you, Brookfield Renewable has some interesting numbers to reveal from their latest report. Prepare for a deep dive into their financial performance and what it means for the future of renewable energy. And hey, if you like getting these kinds of insights directly from official documents, make sure to subscribe and join our Discord community, linked in the description below. Alright, so we're looking at a report filed in August of 2025, covering the period up to June 30th of 2025. This type of filing is essentially an update on how the company is doing financially between its larger annual reports. Think of it as a mid-year checkup for this big renewable energy player. The core of this filing, the really juicy stuff, is in the financial statements. This tells us how much money they're making, how much they're spending, and what their assets and debts look like. Let's zero in on the balance sheet as of June 30th, 2025. We see numbers for assets and liabilities, the things they own and the things they owe. Now, when we look at equity, we're talking about the owner's stake in the company. It gives us a picture of how much value is attributed to the shareholders and other equity holders. The number 000001791,863 appears quite frequently. This is an identifier unique to the company, often referred to as a CIK number in US filings, and it helps tie all these documents back to Brookfield Renewable Corporation. So whenever you see it, it's just confirming we are talking about them. Here we see participating non-controlling interests operating subsidiaries member. This part can be a bit technical. It essentially refers to the portion of profits or net assets that belong to minority shareholders in subsidiaries that Brookfield Renewable operates. It's important because it shows how much of the subsidiary's performance is not truly ours. And then we have equity attributable to owners of parent member. This is the flip side. It's the part of the equity that belongs to the main shareholders of Brookfield Renewable itself. Comparing these two groups helps us understand how much of the company's value is directly controlled by its parent, SAN. Let's look at a specific period, say the 6 months ending June 30th, 2025. We see data related to power purchase agreements. These are contracts where Brookfield Renewable agrees to sell electricity they produce at a set price. These are a big part of their revenue generation strategy in the renewable energy space. Then there are energy derivative contracts. These are financial tools used to manage the risk associated with fluctuating energy prices. It's like buying insurance against sudden drops or spikes in the price of electricity. And interest rate swaps. As a company that likely borrows money, interest rate changes can impact their costs. These swaps help them lock in interest rates, making their borrowing costs more predictable. The Assets 1 member likely refers to a specific category of assets being reported, possibly relating to their core operating assets, and Liabilities member will cover what they owe to others. Net Assets Liabilities member would then represent the difference between those assets and liabilities for a given category. We also see references to Level 1 of Fair Value Hierarchy. This relates to how they value certain assets or liabilities. Level 1 means they are valued using prices quoted in active markets for identical assets, which is generally the most reliable way to value something. Level 2 means they use observable inputs other than quoted prices, like prices for similar assets or information derived from those prices. And Level 3 is for assets and liabilities that are valued using unobservable inputs. This is where the valuation is more subjective and relies more on the company's own estimates. When you see a lot of Level 3 assets, it can sometimes mean more uncertainty in their valuation. Brookfield Renewable is involved in various types of renewable energy, and we see mentions of their different segments like hydroelectric segment member and wind segment member and solar segment member. This shows us how they break down their operations to report performance by energy source. Looking at the equity attributable to the parent for these segments gives us insight into the value generated by each type of renewable energy operation. Property, plant, and equipment excluding construction in progress member is a key line item. This refers to their physical assets like power plants and land that are operational and generating revenue, but it specifically excludes assets currently under construction. And then we have construction in progress member. This represents the value of assets that are being built right now, like a new wind farm or solar installation. It's the investment in future growth. We also see specific asset mentions like a 300 MW utility scale solar member. This points to a particular solar power project they have. And Brookfield Renewable member clarifies that this asset is part of their broader renewable energy portfolio. Now let's talk about debt. Non-recourse borrowings member refers to loans where the lender can only go after the assets of the specific project that took out the loan, not the entire company's assets. This is common in project finance for large infrastructure like power plants. A subscription facility member is typically a credit line that allows the company to draw funds based on investor commitments. And then there are different share classes like BPC Class B shares member. Companies can have different types of shares with varying voting rights or dividend entitlements. Exchangeable shares member are shares that can be exchanged for shares of another company, which can be a strategic move for corporate structuring. Associates member typically refers to investments in other companies where Brookfield Renewable has significant influence but not outright control. And parent member refers to the ultimate parent entity for reporting purposes. The filing details movements and balances for BEPC exchangeable shares member. This shows how the value and number of these particular shares evolved. We're seeing mentions of a 450 MW United States hydroelectric assets member. This indicates a specific set of hydroelectric power assets located in the US that are being reported on. The phrase other disposals of assets member suggests they've been selling off certain assets that aren't core to their strategy or perhaps are no longer performing as well as expected. The A300 MW utility scale solar member was previously mentioned, and when paired with asset disposals, it might mean they're divesting from certain solar assets while perhaps investing in others. I just look at the financial performance over the 6 months. We're seeing figures in US dollars, which is helpful for consistent comparison. And pure might indicate a value is presented without any adjustments, the raw number. Interest is a key expense for any company that has debt, reflecting the cost of borrowing money. Year is simply denoting the calendar year these figures relate to. We also see limited partner equity member. This is about equity held by limited partners, common in investment funds or partnerships. Looking at the overall financial health, Brookfield Renewable is a major player in the renewable energy sector, and these filings give us a glimpse into their operational performance. While specific numbers aren't broken down in this script, the structure of the report shows they are actively managing their portfolio of assets, which includes selling off some and likely acquiring others. Their involvement in various renewable sources like hydro and solar suggests a diversified strategy. The clear reporting of fair value hierarchy levels indicates a commitment to transparent accounting, although a higher proportion of level 3 assets would warrant closer scrutiny for valuation subjectivity. The frequent mention of different share classes and borrowing structures points to a complex corporate organization, typical for a company of this scale and global reach. Now for my take on Brookfield Renewable. They are clearly in a growth industry with renewable energy being a major focus globally. Their strategy appears to be about managing a large and diverse portfolio of assets, which is good for stability. However, the level of detail on specific debt instruments and differing equity structures means there's always complexity to watch. A key risk for any company in this sector is regulatory change and fluctuating commodity prices for energy, and their use of derivatives shows they are actively managing these risks, which is a positive sign. Their financial approach seems geared towards steady expansion and efficient operations. Without the actual numbers here, it's hard to give a precise valuation. But the way they categorize their assets and liabilities suggests a deep understanding of their balance sheet and a structured approach to managing their growth. These structures means there's always complexity to watch. A key risk for any company in this sector is regulatory change and fluctuating commodity prices for energy, but the way they categorize their assets and liabilities suggested. Alright, that's our breakdown of Brookfield Renewable's interim report. What's your take on these insights and what they signal for the company's future in the renewable energy space? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.